Well, here we are. We are starting. We're early. Frank Array here with Tom Hutchins with Angel Oak. We'll be getting started probably about a minute or two after the top of the hour, guys. So for those of you that have gotten here early, we appreciate that. Thanks for getting here early, but you've got about 6 minutes or so to go ahead and take care of a little business, hit the bathroom, get something to drink or whatever the case may be. Yell at your processor that one last time before before this.
It's not the end of the month. It's not the end of the month.
You can do all that stuff. So we'll be getting started here pretty quickly, but we appreciate you guys getting here early. So once again, Frank Array here with the National Real Estate Post and Tom Hutchins, Angel Oak. We'll be getting started shortly. Appreciate you guys showing up. And hey, you know what? Out here in California, Tom, it's supposed to be winter. We're supposed to be cold and wet. And I'm telling you, dude, it's 75 and sunny. We've got this weird hot spell coming through. And it's like I'm riding my motorcycle. I rode my motorcycle to work for a couple days, leave a little early, go the back roads home and now all the trees are blossoming and all the little white blossoms are out all over the place because it's confused. All the plants are completely confused. Yeah, they think it's spring and it's not, and all the aroma, the fragrances of the flowers in the air. I'm like, this is wonderful. I guarantee you next week, all of a sudden it's going to go back to freezing cold and pouring rain. But how's it out there in Atlanta? You guys freezing out there?
We've had a crazy winter. It's okay now, sunny and beautiful today, but we definitely have had a couple snowstorms, before February, which is pretty rare. In fact, I think we had a snowstorm in December, which I don't remember that happening in the last 25 years. And it was a bit like it snowed a foot in Atlanta, which that never happens every 25 years. But it definitely doesn't happen in December. But been pretty mild last couple of weeks. So
right on.
Spring is close.
Yeah, good. Yeah, I like Atlanta. I've been there a couple times. I'll have to go out there maybe this year. Visit you guys or something. Say hi.
Please do anytime. It's a great place.
We'll do a webinar from your office. Yeah, we'll do it from your office together.
Yeah, we can do that.
Yeah. All right, guys. Well, thanks for getting here a little early. It's still a couple of minutes before the top of the hour. We'll be starting about a minute or two after the top of the hour, just to make sure everybody gets logged in and does their business. So you got a little bit of time here just to go ahead and get started or go ahead and get some coffee or a soda if you're on the East Coast, whatever the case may be. Hit the bathroom, whatever. We got a couple minutes before we get started. So thanks for showing up a little bit early. Oh, man. So what else is happening, man? How's Angel Oak doing? Angel Oak good?
Everything's great.
Oh, awesome.
We're growing, opening a new ops center in Dallas.
Wow.
Exciting.
That's cool.
Yeah. Coming up in about 3 weeks, we'll be operational there. So
So is that just where some underwriting and processing is going to get done, basically, that kind of a thing?
Yep. It'll be a kind of a mirror to Atlanta. So
how come you picked Dallas? What was the thought behind Dallas? Just because it's a hub and it's in the middle?
It's a hub. Lots of a lot of mortgage people there.
Yeah. And plus it's in the middle, so if people have to fly in or fly out, I mean, Dallas is like, it's right.
About as central as you can be.
Yeah. It's like you can either, if you want a hub to fly in and out of, it's like Dallas or Colorado, you know what I mean? Right. Everybody's flying in and out of there, So, all right, guys, you got a minute till the top of the hour. We'll get started just about 1 or 2 minutes after the top of the hour. So you got a little bit of time. Thanks for getting here early. Frank Array here with the National Real Estate Post, along with Tom Hutchins with Angel Oak Mortgage Solutions. We'll be jumping into this webinar real quick, and we're glad you're here. Thanks for showing up a little bit early. This is a great webinar series we've been doing, Tom. I mean, I really enjoy this one. This one has really gone over well. Hence the reason this is like our third time doing it or whatever it is. But people are really getting a lot out of this one. It's a good one.
It's in a short amount of time, we cover a lot. And it's very useful, practical information that people can take with them this afternoon.
Yeah, that's what I like the most about it.
We're not talking about putting together their strategies for the next 12 months. It's what can I do today?
Yeah, you can go. That's why I like this one. Yeah, exactly. You can just right at the end of this one, it's like, oh crap, I've got something I can actually use right now and go. You know what I mean? And start doing something. So it's really good. All right, guys, it is the top of the hour. I'm going to give, it's actually 1 minute after. I'm going to give us all just one more minute, and then we'll go ahead and we'll dive into this webinar. I'm gonna just make sure. Okay, we are recording, so we're good to go there. Just want to make sure. These webinars are set up now to auto record, and I did a webinar the other day, and I'm not used to it auto recording, and so I open it up, and it says it's recording, but it's still a red button, right? And so I'm like, okay, go, and I stopped it.
You unrecorded it?
Yeah, I unrecorded it. I was like, God. So now, lessons learned.
Yes, technology. Now you know.
Yeah, exactly. All right, so we are about to get started here. Guys, in about 30 seconds, we'll get started. Appreciate you showing up early. Really appreciate that. So just hang tight, and we will get going here pretty darn quick. Yeah. And we're ready to go. I think we're going to go. So we'll keep our videos live here, and if you're watching us on the recording, or if you're watching this webinar on the recording, guys, don't worry, you'll have some visuals popping up on the screen shortly. On the recorded version of the webinar, you don't see our video, but so you don't have the distinct pleasure of looking at and seeing how handsome Tom and I are right now, but
it might be better off.
Yeah, you might be better off on the recorded side. So sorry about that, but we will have the PowerPoint up shortly. But before that, we just want to I just want to open up the webinar with some thoughts. This webinar is really great. I think this is the third time we've done this particular series, and it's gone over really well because not only are you guys going to learn a bunch of product that the company has, that Angel Oak has, this is what we call non-agency stuff, guys. This is when you've got those deals that just don't fit into the QM box or the government box, and you're kind of thinking, well, that's that. It's probably isn't that. There's probably something that can get done. So Tom's going to make you aware of some of the things. In fact, he's going to go over some scenarios that are real scenarios that they've done that will probably trigger your mind and trigger you guys to go, oh, I had one of those, or oh, I think I got one of those, that type of a thing. So we're going to go over that. You're going to see all that. Also, I just want you guys to remember that everything you see here today, of course, we're going to record this webinar. You're going to get a copy of the PowerPoint. You're going to have account executives reaching out to you after this is all done. And I want you to keep in mind that you could take advantage of all this, because not only can Angel Oak and their products, help you build your pipeline, your personal pipeline immediately with scenarios that you probably have right now in front of you, but the products that Angel Oak has and the way that they do their business and do their loans, guys, are excellent talking points for you guys if you want to go out and do like real estate presentations, that type of thing, real estate offices. And Tom will touch base on this a little bit later, but even their account executives can help you with that if you feel the need for that. So I want you to keep that in mind. We're going to touch base in this webinar on different places that you can actually find this type of business, because this non-QM or non-agency business that doesn't fit the QM guidelines or fit the Fannie Freddie guidelines, it's all around you in your existing, it's in your pipeline, and it's all around you in other areas that you can find this business if you just go out there and ask for it and let people know, I got this. And we're definitely going to touch base on some of that as well. So with that, and then finally, keep in mind, we're going to also review any scenarios that you guys have today if we can get to them. So what we want you to do is, as Tom is going through his presentation, guys, on your screen, there should be a little box where you can type in questions and that kind of a thing. What we want you to do is we want you to, if you think of something while we're going through, just type in the little questions box. Hey, I've got this type of borrower with this kind of credit score, this kind of LTV. This is my little scenario. What do you think? Go ahead and dump those in the questions box as we go through this whole presentation, guys, and just don't worry about what it is. Just get it in there. Get it in there, because what we'll do is at the end of this webinar, we'll try and answer those directly. Tom will try and answer those directly, but for the sake of time, you might not be able to get to all of them, but don't worry, because once it's in the questions box, that information gets transmitted over to Angel Oak, and then their reps are going to get those questions. The reps that are associated with your area will get those scenarios and give you a call and reach out to you guys and help you with those scenarios. So get them in there. If we don't touch them on the webinar, don't panic. Somebody will reach out to you, right, Tom? Somebody will reach out.
Well, Frank, I think that's a great point, because, and I think that's why people really like this webinar, because it is interactive. You know, we're not in front of everybody, but people get to ask their questions, and you and I get to talk.
Yeah.
Yeah. Please send those in, and we'll address as many as we can today, and we'll follow up if we can't get to them in the next 45 minutes or so.
That's excellent. Okay, so guys, we are going to go ahead and turn our videos off, and then I'm going to hand the presentation over to Tom, and he's going to bring up his PowerPoint. We're going to go ahead and dive in. Are you ready, Tom? Okay, let me find you. All right, staff, here we go.
All right. So is my video now off?
It is off. It is off. And now I am making you the
Okay.
presenter, and you should be good to go.
Okay. How's that, Frank?
It looks great. We got the screen. You're good to go.
Okay. Awesome. Well, it was a great setup, a very good introduction, Frank. And I think I really would just like to start just a really quick background for those that don't know Angel Oak Mortgage Solutions. We are a wholesale and correspondent lender. We are based in Atlanta, Georgia, and we've been doing non-agency. You know, a lot of times it's referenced as non-QM, but it's a little bit broader than that. It's non-agency loans. We've been doing them exclusively for coming up on 5 years. So we were doing non-QM before the non-QM designation even came into being. So I think it's just important to note that, because actually doing non-QM and non-agency loans requires a certain level of expertise. And because we don't get distracted by other products and programs, we're really good at what we do. So a couple other things, Frank, as you said, you know, our account executives, we'll talk a little bit more about it later, but you know, I hope you learned something today, and that you want to take what you learned today and share it with your business partners and your referral partners, because that's really, you know, that's how you're going to grow your business. And that's what we want to provide for you today, is just information and tools to help you just capture more business. So with that, I kind of jump in. I mean, one of the things that I think is really important is just to talk about real life scenarios. You know, instead of talking about theories, and we're not going to talk about guidelines and talk matrices and stuff like that, but I really wanted to just start with some situations and see if anybody on the phone can relate to these on this webinar, can relate the situations, because you know, post crisis, the credit box, the credit pendulum swung really far to the one side of tightening, and so that's what Angel Oak has been working on for the last four to 5 years on just bringing that pendulum back to reasonableness. So you know, really, if I could, I just want to spend a few minutes showing some scenarios of real loans. These are not theories. These are loans that came into Angel Oak, and we underwrote those and closed these loans. So with that, I'll just kind of jump right in. But this first example is somebody, if you look across the top, somebody who had a Chapter 7 bankruptcy in 2014, and when their bankruptcy was over, they then had a foreclosure a year later. This loan actually closed in 2017, so the seasoning on the foreclosure was less than 24 months, and you know, that's a really big portion of our business. I think when we talked last week, Frank, you know, we identified that over 50% of our loans that close fall into this some type of bucket like this, some type of credit event. Well, this is a credit event, foreclosure or bankruptcy followed by a foreclosure, that is not going to qualify for an agency or government loan. So this borrower came to us. You know, one of the things that everybody needs to understand is that we manually underwrite every single loan. So we often call these loans storied loans. You know, what's the story behind the borrower's situation? And in this situation, this borrower story is the primary borrower was a self-employed individual and was diagnosed with cancer, and so basically kind of had to shut down their business and lost their primary source of income. And so that caused the bankruptcy, and then that was followed by the foreclosure. But during that time or following that period, they worked really hard to right the boat, so to speak. And the primary borrower went out and got trained into another skill. They became renters, which, you know, a lot of people, they go from being homeowners, they became renters. We were able to document their rental history, and they had a perfect rental history for the last couple of years. And so they came to us with, you know, $182,000 mortgage, which was an 85% loan to value. You can see their scores, 680, 690, you know, both still had good scores, good income. We didn't even use the primary borrower's income, just the co-borrower's income, but they also, you know, they were kind of right sizing. So, you know, if you look above, they had a $341,000 mortgage previously. That's what went into foreclosure. They came to us for a $182,000 mortgage. So, you know, that's right sizing their mortgage. Solid DTI at 20% back end ratio. And so, and then we looked at what their new mortgage payment is. You know, we payment shock is a big factor that we look at in considering and approving these loans. And their payment on their mortgage was just a little bit higher than what they had been paying on rent for a couple of years, and they had a perfect rental history. So we were very confident that this was a deserving borrower. But if agency lending, government lending were their only options, they would not be able to get a loan. So, you know, this is just a scenario. These borrowers are out there, and this is a loan that we closed.
Awesome. Nice. I love it.
Yep. Very common situation. So let's go kind of look at another one. So here's another one. This is a self-employed, someone in the real estate business. Actually, they've been in the business for over 10 years, but they had a foreclosure on a vacant investment property on a lot. It didn't even have a home on it. It was a lot, but they had a loan against it. And, you know, it was one of those stories. They bought it in the peak, and then the value of it just wasn't coming back. And so they really made kind of a strategic decision to walk away from this property. Well, the challenge is that's still, you know, that's from a credit perspective, that's still a foreclosure. So then on top of that, they wanted a jumbo loan. So a jumbo loan with any kind of blemishes in the last, you know, at least 5, if not 7 years, it's difficult to get any kind of financing. So, you know, this loan came to us. They had a good verified with tax return income, but they wanted a $612,000 loan. So we looked at it all. They had good back end ratios of 40%. They had a good, you know, their primary pay history had been really solid. So they've never really had, their only blemish was this vacant lot that was foreclosed on. So they came to us. We gave them a 90% loan, which I think it's important to note, Frank. These two scenarios were over 80%, but none of our loans come with mortgage insurance. So this is a 90% one loan, $612,000 loan amount, and everybody left. And then I guess that last bullet down there also just talks about how they also have reserves. You know, we're looking at the whole picture. So they had money in an IRA, they had some liquid reserves, and so that obviously helped the strength of the loan and allowed them to get this $612,000 loan.
Do you guys tend to see? I mean, obviously that the jumbo loan amount is certainly one that's going to shove, you know, already strict guidelines into stricter guidelines when we're talking, you know, your regular paper type of loans. So it's really remarkable to be able to do a 90 LTV at 612 in this scenario with it. I mean, that's just remarkable, right? But do you find that the jumbo loans are pretty common for Angel Oak?
Yes, absolutely. In fact, there's some specific loans that we can even talk about where our average loan amount nationwide even is over $500,000. So yeah, jumbo loans, kind of to your point, Frank, the tight agency guidelines get even tighter. And they're just more difficult to close in most cases, but we make it easy. We have a make sense approach to it. We do loans up to $3 million, and we're doing large loans on a very regular basis with very aggressive loan to value. So the people that are wanting the jumbo loans and wanting minimum down payments, those are the kind of borrowers. So yes, the just missed jumbo, that's a big piece of our business that continues to grow.
I love that, just missed jumbo. That's a great term. Yeah. The just missed jumbo.
It's just missing.
Yeah.
And what just depends on what's causing it to miss.
Awesome,
so,
man.
Anyway, again, another real loan. This is one that we closed, and we close loans like this every single day. So the third example that I wanted to share with you is kind of changing gears a little bit. The first couple we saw some credit events, and as I mentioned, that's over 50% of our business. But the other big portion of our business that I believe a lot of loan officers and realtors can relate to these type of loans, they're for the self-employed borrower. Everybody remembers leading up to the crisis, the stated income and the no income loans for the self-employed borrower. Well, those went away entirely, and in most cases, understandably and justifiably so. But what we feel like, so there's been this huge pool of self-employed borrowers, and people ask me, well, where are you seeing these bank statement loans? And my answer is really simple. We see them everywhere. There's self-employed borrowers everywhere. It's in fact, there's almost 20 million across the country self-employed individuals. So they're everywhere. They're all around. Anybody who's listening, these borrowers are around you. But what's interesting is that the Fannie guidelines require 2 years of tax returns, and everyone knows one of the big advantages to being self-employed is you get to write off a lot of expenses through run them through your business. So your tax returns may not be, and in a lot of cases for self-employed borrowers, they are not necessarily the best indicator of your ability to repay a mortgage. So here's a scenario right here. We have a borrower with good credit, a 721 credit score. They've been self-employed for 8 years. And we took their personal bank statements and looked at what their cash flow in their bank statements were over a 2-year period. We can also do it for 12 months, but in this instance, it was 2 years. And they averaged $14,000 a month in deposits. So we looked at the 2 years, saw the average deposits of $14,000, and that's our income. And then, a couple other little things. They were a first-time home buyer, but they had documented rent payments of $1,800 a month. They had examples of car loans that they had and paid perfectly, hence the 721 credit scores. And then the loan that we gave them, we gave them a $422,000 loan. Their total payment on their new house was $700 higher than what they had been paying in rent. So again, it's just, this is a make sense loan. We did it at a 90%. So that borrower only had to come to the table with 10%. No mortgage insurance on those loans, one loan. And this is what we're seeing. So can you hear me okay, Frank?
Yeah. It's where we are cutting in just a little bit, cutting in and out just a little bit, but just rest assured, guys, on the recording, I've usually found that does not translate to the recording. The recording is usually perfect. So If there's a
Okay.
little breaking in, breaking up, it's okay, Tom. I mean, we're understanding what you're saying. I mean, it just might get, stop for a second, then catch up, but it's not that bad, but it's a little bit.
Okay.
But
All right.
but no worries.
Got
But
it.
can I ask you something on this?
Okay.
So,
Sure.
because I know it's going to come up if it's not already in the questions, is these scenarios, this one in particular, this person here, would it be possible to help a guy like this out? He's got the good credit and all that, but let's say the 10% down, he had to get that from somewhere else, like a gift or something. Is that acceptable?
Yeah. Yeah. We accept gifts. Something that we say regularly is we require borrowers that have funds or access to funds. If they're getting an entire gift, the guidelines change a little bit. The LTV come down a little bit. But yes, we allow gifts. In general terms, we need 5 to 10% of their own money in the transaction.
Okay.
To do the highest loan to values. But if they're getting a full gift for the entire down payment, we can do that loan, but we'd probably look at it at say an 80% loan to value versus.
Gotcha. Okay, good enough.
But yeah, that's a great question and a common one. Thanks for bringing that one up.
Okay, cool. So, so these are real familiar scenarios, and I'm sure this is definitely triggering, a lot of thoughts to our viewers right now, and they're probably going, "Oh man, I know that deal. I've got that deal, or I just lost that deal." You know what I mean? So again, guys, put your questions or your scenarios into the questions box. We're going to get it looked at real quick. But Tom, if they don't want to wait for a call back from the AE or something like that, how do they reach out to you guys and get something looked at quickly? Where do we do that?
Well, Frank, we can go to the website. That's probably the best place for anyone to go. In fact, I would say to get started with Angel Oak, our website is the best resource. Should you want to jump over there and let me?
I think so, but maybe before we go there, because I just thought of this and I don't know, and forgive me if I'm jumping ahead on your presentation. I don't mean to do that, but as far as we were going to touch base, and maybe that's coming up on like where can we find these deals before we jump to the website. Did you have a slide for that on this presentation by chance? Like, where can I find some of these deals? Yeah.
And that's I kind of already mentioned it earlier, that the self-employed borrowers being all over the country, but yes, I think loan officers right now are looking for places to source new loans and new borrowers, and I think it's important to kind of think through and put together a strategy around that, and frankly, the non-agency loans help open up some doors. So first and foremost, already mentioned it, the realtors. There might even be some realtors on this call or on this webinar, but realtors are the kind of the first line of defense, and through the post-crisis, a lot of realtors learned what kind of loans could not get done, and so they would filter those borrowers and those potential buyers. So I think it's really important for anybody listening today is to get out there and have these discussions with the realtors, because they know the self-employed. They probably know borrowers that have had some credit challenges that want to buy a house. They're in a position to buy a house, but they didn't think they had an opportunity. So, I'd say first and foremost, start there. The other piece that we have our customers tell us a lot is that, think of any borrowers that you've had to turn away in the last 6 months or whatever period of time. Those borrowers might have fit into an Angel Oak product, a non-agency program, but you weren't aware that these programs were available. So those two are probably the biggest, but then, the obvious ones, builders and developers, but, builders, their business is good right now, but they never want to lose anybody that walks into a model home. Any potential buyer that walks into a model home, they want to be able, if that borrower can qualify for a loan, they want that buyer to have that opportunity to buy the home. So that one's a pretty big one. Lots of builders understand this and want to be involved in it.
Definitely.
Yeah, and then accountants, CPAs. We talked about the bank statement loans and the borrowers who have a significant amount of write-offs. Well, who's doing these write-offs? It's the accountants and the CPAs. So, great referral base there for, going to them. They know who can qualify for loans, but their tax returns would not allow them to qualify. So,
right.
Again, a great resource. So then you've got the financial planners, obvious, same kind of reason. And then, bankruptcy attorneys. So we do, our bankruptcy seizing requirements are significantly less than agencies. So there's really no better place to start than actually the bankruptcy attorneys.
The other thing too that for guys to consider, and we had brought this up, is the other lenders in town. There's lots of lenders in town. Your small credit unions, your small banks. Right here in my neck of the woods, I can throw a rock at 3 small banks. There's a U.S. Bank, a Bank of the West, and a First Northern Bank. And I guarantee you, they do mortgages. I know they do, because when you walk in, it's like, we do mortgages, right there. But I can assure you that these guys are not doing anything that's non-QM or non-agency at all. They're not. And they run into these scenarios all the time. And so, and these are usually the type of loan officers that they're really not out in the field that much competing with you with your real estate business. They're really not. They're pretty much in there just taking care of the bank customers for the most part is what they're doing. So they're not afraid to refer somebody out to another loan officer. They're really not. And so if you can go in and kind of befriend the loan officers in your small credit unions and local banks, that aren't really out there in the field competing with you, that don't do any of this non-agency stuff, and let them know, hey, if you run into any snags at all, let me know. I could probably help out. You'll be surprised at how many referrals you can get from them as well.
That's a great point, Frank. And yes, we do have quite a few customers that do just that. There's just some companies, even think of some of the big mortgage companies, the big banking institutions, they're not participating in non-QM. So those originators want to take care of their customers and their referral partners. So they'd be happy to refer them out to you if you can help get some loans closed for them.
Yeah, awesome. So is it time to go to the website so they can see how they can go run their own scenarios, or?
Yeah, I think it is time. Why don't we do that?
Yeah, let's do that. This is how we can. First of all, Tom's going to show you how you can find who your rep is, and then he's going to show you how you can just really quickly get a quote and run some quick scenarios on your own right from their website. So go for it, Tom.
Terrific. Is our website on the screen there, Frank?
Yep.
All right. So I'll just kind of highlight here at the top, angeloakms.com. Of all the things, maybe write this part down. We'll send you that presentation, and we'll send you the audio recording and things like that. But angeloakms.com, mortgage solutions.com. That is that's our website. And then all the resources that you need to do business with us are right here. But let's just kind of go where you started. First, up here in the top right, where it says "Contact Us," is Find an AE. And if you click on Find an AE, it'll pull up a map, and this map shows everywhere that we do business. And I will tell you, some of these gray states are in process. So, but in any of these green states is where we're currently and actively closing loans. What you would do is just find a state, Colorado, you click on it, and then that's going to pull up someone to contact and a link to an email. That's our regional sales manager there. But that's the easiest and best way to find who it is that can help you in your market. Go make presentations. They're happy to come to you and educate you on the kind of loans that we do and how to best fit into your business.
There's somebody's in there. They were in there from the very beginning saying, "Hey, how about Hawaii? When are you going to be in Hawaii? Any news on Hawaii, Tom?"
Yeah, that one's a little more little further down the road. I would say, but every state is in our plans. It's just a question of when certain states and requirements of certain states. So
all right, but the plan is to get everywhere. So
absolutely. Okay. Any other questions that you've seen come through, Frank? Just feel free to jump in and and we can address them now or whenever.
No, yeah, I
So-
think once you get through the website, we'll just go and dive into trying to see how we can get some marketing materials, and then we'll go to the questions. I think we're good.
Okay.
Yeah.
Okay, cool. All right, great. Well, this is moving along really, really well. So from this, our main page, from our homepage is the most popular spot on our website is called Quick Quote. And it's right there. There's a link. When you click on it, you have to type in your company. So I'll just say ABC Mortgage, and there's no block, but it just helps us know who is using this. But you put that in, and as you can see, there's just a handful of questions that you have to answer. And so let's just kind of start. These are a lot of these questions that might be getting submitted, Frank, they can be answered right here on Quick Quote. So we'll put in some credit scores, a 720 loan amount, let's say 750 to $1 million. Loan to value, our average loan LTV is 75, so I'll say 70. Housing history, if you can see this is where you would say I've had a foreclosure less than 24 months or less than 12 months, and some other potential late pays. But for this example, we'll just say 0 times 30. And as soon as you answer that question, the options start popping up of our programs. And these programs aren't something that you need to remember. It's just something that, how we categorize them. But you can see right here, 3 different programs popped up for this borrower in this scenario. And you can just change it. Let's say, so it's pre-selected at full documentation income. So let's just change it to 12 months personal bank statements. And then it changes right there on the fly. And you can see we have a platinum product that this borrower could possibly qualify for. We requested a 70, but we'll do up to a 90%. So that was up to $1 million, and we'll do up to a 90%. So let's say that loan amount was a little bit higher. It was 1 million to 1.5. We change it. Oh, look, and nothing changed. So we'll still do a 90% personal bank statement loan up to $1.5 million. So again, this is very fluid. Any change you make changes immediately on the website. So it's just something that you can click around and play with and get answers to your questions quick. We found it helps loan officers if they're talking on the phone to our borrower or in front of a borrower. They can actually kind of get an idea. Nothing specific, but general terms. We have right here bankruptcy seasoning, housing event, as in foreclosure seasoning. If you see it's less, here we have 24 month seasoning. So that would be a different product. So anyway, that's kind of how it works. And then from here, it's very simple to go to the next step. Let's say this borrower, you're looking at it, they're 48 months out of their bankruptcy or foreclosure. We've already said what? Personal bank statement, 75% loan, up to $1.5 million loan amount. Right here, a pre-qualification request, you just hover over that and you click that, and it takes you to the next screen, which is where we just get a little bit more information. So you click who your account executive is, some information about yourself and your company, the program that you were looking at, and then choose your 1008, 1003 credit report, put any comments if you have some comments, and then click submit at the bottom. And that goes directly to that account executive, and we will have an answer in writing back to you within 24 hours.
Pretty fast.
A few buttons, a few clicks, upload a 1003, 1008 credit report, and we're getting back to you in writing with what program and the terms of the loan for that borrower.
So I noticed here, Tom, that you didn't have to log in. You just basically said what company you work for, and then you were rocking.
Yes.
Is that
That's
the
it.
case?
That's
so
it.
So even if someone
you do not have to be approved with Angel Oak to send a pre. That's a great point, Frank.
Yeah, so if you're not approved, but you got the scenario, run it past them, get it in there, and if they say, "Yeah, it looks like we can do this," well, okay, let's get approved. Let's go down the road. That's really cool of you guys to do that, because that helps. You know what I mean? That helps the originator in the field for sure. And if their company hasn't gotten approved yet, now they can go to their whoever does that process at their company and say, "Look, I got this deal, and it's okay over here at Angel Oak. Let's get approved real quick."
Yep,
So,
absolutely.
Yeah,
Very
that's
simple.
cool.
And since you asked that, so is that pretty good? The pre-qual request system, I think it
Yeah.
is.
Yeah, it's good.
So since you asked something about becoming approved, that's right here on our homepage as well. You just would click on the broker package, and the agreement and all that is right on our website. Instructions on how to do it, and we'll get you in touch with an account executive, and we'll help walk you through the process. So pretty simple. You can go directly to the pre-qual request from our webpage, from the main page, and then obviously the quick quote, like we also talked about.
All right, cool. Let's say we do get approved, or we already are approved, and
Yes.
we want to try and go scrape up some business from those other areas that you discussed. Builders, CPAs, other local banks, credit unions, that kind of a thing. How do we grab some marketing materials to go out and start spreading the word?
So yes, if you are approved with us, you will receive a username and login, and you can see this green bar right here on our main page. All you would do is click on that, and when you click on that, that takes you to our portal. And this is a testing portal, but you would have your email and your password, and you would simply log in. And when you do that, it takes you to the portal where we have contacts of our account managers that can help you with whatever you need help with. But what you're talking about, Frank, is marketing flyers. So you see right here on the top, flyers. We have an extensive collection, library, if you will, of flyers. And so you can look at all the different ones and see which one you want to get out there and market. But let's just say, bank statement. That's something that you think would do really well. You click on it. And what's nice about these, Frank, is that there's nothing about Angel Oak. These are not Angel Oak flyers. These are for our loan officer partners to go out and use these flyers to market. So they would click here, download your logo, go to the bottom of the form, type in directly on the form your name, title, contact information, and NMLS number, and then you save it. I mean, you really save it, and it's your flyer. You can print it up. You can just save it, so you can email it out to your contacts. You can post it on social media. Again, as an approved customer of Angel Oak, these are your products. So it's not something that, Angel Oak, we're not here to put our name out there. This is for our partners. Get their name out there and get these products and programs in front of potential borrowers.
Nice. That is awesome. That is fantastic. Let's say we go to some questions. What do you think?
Yeah, let's do it.
Okay, I'll take the ball back from you, and then we'll start our. Let me get to our attendees, and then let me make me the presenter. And so, for those of you watching the recording, you're just going to go back to the webinar screen, and but for those of you that are here, we're going to start our videos again, so you can see our smiling faces, and we can go through your questions. Yeah, but we'll go ahead and entertain some of these questions. So let's see what we've got here, and we're doing really good on time. It's only 10:38, so we could spend about 10 minutes on some questions, and then we can still get you guys out back to work. Didn't spend too much time with us, but we hope that it was really, really helpful. So let's see. Okay, it was 10 degrees where Joshua was this morning when we were talking about the weather, just so you know. We addressed the Hawaii questions.
Yes.
Some people had a little trouble hearing us, but don't worry, the recording it should be fine. Let's see. Here's somebody saying, okay, how about a cash out refinance? It says 2-family home, so maybe that means a duplex. I'm not sure.
Duplex? Sure.
Yeah. Credit score 630. Recent mortgage rates and open collection accounts. Primary residence. Or is that even in the realm? But they didn't point out an LTV here. So is there an LTV that might work?
So this is kind of what I mentioned earlier. That storied loan. So we're talking about a borrower with a 630 credit score. No problem with that kind of credit score. In fact, I love to give the statistic that almost a third of Americans. Can you hear me okay, Frank?
Yeah.
Okay. That a third of Americans have a credit score below 620. So 630 No problem. Fine with that credit score. But someone wanting to get a cash out when they've had current lates on a mortgage, we really need to know what happened there. Because if we're going to give them more money or a bigger, larger loan amount, but they haven't been able to pay their current loan amount, what's the story behind that?
Something going on, but
might make a lot of sense. Debt consolidation is a big thing that we do a lot of. So in that scenario, maybe we're paying off some credit cards with high balances and high payments, and that's caused them to have problems with all their debts. So if it puts them in a better situation, that's absolutely a loan that we can do. I would say we just need to know more.
Yeah, this like you said, you want to know the story. What's going on? How come they're late? What's the deal? Obviously, they're looking to do something, So here's one. Can you do a refinance for a house that is being used as an ALF? I'm not sure what that means, ALF, which is in the name of a corporation. ALF, something living facility, assisted living facility.
Assisted living facility. No, I don't think we're.
I bet that's what that means. Like where they had people buy homes, they'll have people living in there, and they take care of people in there. It's like a business.
That's kind of
with single family homes.
Yeah, that's a little bit more of has a bit of a commercial flair to it. So not sure we'd be able to do that.
Not necessarily in your wheelhouse.
Right. Yep.
Okay. Someone's asking define non-QM, and that just means it's a loan that doesn't fit into your Fannie Mae, Freddie Mac guidelines or your government loan guidelines. It's outside of those guidelines.
Absolutely.
Okay, let's see. Here's one. These are fun. Don't you love doing these, Tom? This is so much fun.
Yeah, absolutely.
We're gonna call it Stump Tom. Let's stump Tom. Okay, let's see if we can stump him. All right. Okay, so Tamar Taylor has a borrower. Salary's $150,000 a year. Looking good.
Okay. Good.
Credit mid 600s. So we're still afloat. Okay, let's see. Not a lot of savings. They got a kid in college. They had a bankruptcy 5 years ago.
Okay.
And the house was included due to a divorce. So here's some of our story. Okay.
Yep.
Home's yet to be foreclosed, so it's still hanging out there. But it was in the bankruptcy apparently.
Okay.
Yeah, house was included. She's moved out years ago. Yet bank hasn't. The bank on the old home just hasn't dealt with the house yet. She wants to purchase again. Is this person the bank? The bank does not report to credit bureaus as the home was included in the bankruptcy. So. That's the tricky part on this story. So what are your thoughts on that?
Well, what I would say is there's one document that's going to be really important in that scenario, and that's the bankruptcy papers. The bankruptcy papers are going to clearly state they gave up the home. So the home was given up. We're probably going to be fine.
Okay, so I would say that's something you want to get in front of these guys, and just obviously he can't commit to this, but he's saying. He's not running away from this file. So I would get that story up there and get it in front of them and have them take a look at it. These are good stuff.
Yes.
Let's see.
So Frank, if I could, that's the reason I love these scenarios is that, most of the times it's like, okay, what's more to the story? So that's what our account executives do really, really well, because that's what they do all day. So when you send them, upload that 1003 and that credit report, they're going to probably get back in touch with you and say, hey, I wasn't clear on this or that, and let's get the story, and then we'll get you an answer. Now, if it's a cut and dry, you got a foreclosure from 3 years ago, they're W-2'd, and here's their savings, and here's the loan value, we don't need more information. We have it right there in front of us. So that's what's kind of fun about the business, is finding these solutions for these borrowers.
So one guy had an interesting statement, and he's just curious. This is Bill, and he says, "Are loan officers selling these products facing any pushback from borrowers, realtors, social media, comparing the non-QM to the subprime stigma?" So,
yeah. Hey, so that's a great question, because for the first couple of years of what we were doing, that's what we were faced with. Angel Oak was faced with, and it's really we've been on an education mission, just to educate people on what subprime was in 2005 and 2006 and what non-QM is in 2018. And now we've got a 4+ year track record. We've issued securitizations of our products. The performance is actually public knowledge and public data. So we're proud of it. You know, we want to talk about it. So I don't think anybody today is really saying, oh, this is just like 2006. I mean, think about some of the questions that you asked me, a 630 score, and, you know, it's makes sense. It's common sense lending. We manually underwrite every loan. So there's no computers making these decisions. We look at the borrower's situation, their credit report, their income docs, their asset documents, and we make a lending decision. And we do a really good job of making good decisions.
Cool. I think too, guys, a lot of it is if you're presenting these products to a borrower, a realtor, or whatever, just using the terminology non-agency. You know, I mean,
Yes.
if you use the terminology subprime, then it's going to be like, Wah! You know. But if you say non-agency, then, you know, that explains it a little bit better. If they go, what's non-agency? So it's just these are deals that don't necessarily fit into the Fannie Mae, Freddie Mac government mold. They're just outside of agency. And then that's, you know, that's a better way to do it. We had Teresa, I guess one of our scenarios, we were looking at 721, 10% down, 18 DTI. That's not a challenged borrower. No, when we were looking at that scenario, I think that the challenge in that, I can't remember which scenario that was, but was more than likely a self-employed borrower that didn't have the income supported through tax returns. Teresa, so if you can't support income through tax returns, that is a challenged borrower. That's definitely a challenged borrower who, with their bank statement program, now you've got a qualified borrower. So that's what Tom's pointing out.
Yes.
Here's a good one. I love this question. This is Ryan. Let's see how Tom answers this. What about foreign national borrowers? Okay. Here's the kicker though. They've got 30% down. They're 70 LTV, right? The loan amount's only 280,000. Okay. But here's the kicker. Here's the kicker. They just don't have any real established credit out here yet. So thoughts on that?
So that sounds a little part of one of the issues with but one of an important factor in a foreign national is defining what a foreign national is. At Angel Oak, a foreign national is someone who lives and works in another country. So establishing credit in the United States is not even anything that we look at. And we'll do these foreign national loans up to even a 75% loan to value. So it's not that is not a factor for us at all. We are looking at the credit in their home country.
Yeah, he might be. You know, the best thing is just hang tight, and an Angel Oak account exec is going to get a hold of you on that one and go through it with you in detail because it might be something in their wheelhouse that they can do. I think he might be viewing foreign nationals as maybe somebody who's just new to the country. You know what I mean? And live, you know, a naturalized
on a visa or something.
Yeah, it doesn't really happen. And so, but the account executive can help with that. Here's a great question from Mel. Do you do pre-approvals on buyers? In other words, they don't have a property yet. They just want to get the file credit approved.
Absolutely. All day long. Do that a lot because I know a lot of people don't want to even go out and make offers and properties until they get a pre-approval. So we're fine to take someone's 1003 and credit report and provide you with that pre-approval.
Okay, and so Mel, he's also asking, can you send me a package? Mel, just go to angeloakms.com and right on the home page, it's get a broker package. You just click there and download it right there. Just go to angeloakms.com. Okay.
And we'll have an account executive get in touch with him to help him with the process if needed.
Okay, let's see. This is a good question. And again, guys, there's a lot of questions here, Tom. I'm just trying to get through, but just remember, guys, if I didn't get your question, your account exec from Angel Oak is going to get a hold of you and give you a call and go over your questions with you.
You got it.
Here's one. Are the asset seasoning requirements similar to agency deals? Asset seasoning.
So our asset seasoning across the board is 30 days. We need 30-day seasoning.
Okay. There you go.
Most conventional agencies going to be 60, so ours is 30.
Cool. There you go. 30 days.
And not a big issue, as you know, we talked about earlier, gifts and things like that. So I'd say we're pretty understanding about that.
Okay, good. Someone's asking if they're going to get a copy of this PowerPoint, and yeah, we provide that at the end, right? We'll send that out to you guys.
Yes.
Client has a score of 645. They want to do a refi and cash out of 100 grand. Credit score is putting us into an FHA product so that I can go with a higher LTV to achieve a goal closer to $100,000. They want to get out of a mortgage insurance position. This is a long one. Maybe I shouldn't have picked this one. Gosh, it's so long. Basically, they've got an FHA deal that they're trying to do a cash out on. It looks like they're only going to get $96,000 at 4.5%. I'm going to let the AE handle this one. It's pretty involved. I can't dive into this one. Let's see. Do you have an AE, Raphael Wilson?
We sure do.
Yeah, well, somebody really likes him. Says
all
he's
right,
awesome.
Raphael's in. He's in Houston. So good shout out for Raphael.
Okay, and we'll just field this one more question, and there's a bunch more guys, and I'm sorry, there's so many. I mean, there's just so many. So this is a simple question. It'll be easy, and we'll go ahead and sign off. And I'm glad we're signing off about 10 minutes till the top of the hour. We're going to get you guys out of here, and get you back to work, and we'll have this stuff out to you as fast as possible. At the latest tomorrow morning, you'll have the PowerPoint, the recorded version, etc. Angel Oak's going to have all these questions in their hands this afternoon, so I'm sure they'll be cutting you guys down really, really quickly. But our final wrap-up question here that I think, Tom, can the reserves be retirement funds?
Absolutely, yes. Yes.
There you go. Send that file in.
Funds. Yep. Finish on that. But, you know, Frank, I hope this was valuable time for the listeners, because based on the number of questions, it sounds like there's a lot of things going on out there. So I would just encourage everyone, as you've pointed out a couple times, we're going to get those questions. We're going to get those questions answered. But if you have anything, angeloakms.com, broker package, quick quote, find your AE. All the resources are right there. Submit pre-quals, upload 1003s and credit reports. We'll get them to the right AE and get back to you promptly.
Awesome, man. Well, I hope you guys enjoyed this. I found it great. You know, again, everything will be out in your guys' hot little hands here as quick as we can get it out to you. Go out there, get some new business. Let people know that these loans exist. Fill up your pipelines, and get your scenarios run past Angel Oak, because I think you'll be surprised you'll be able to get a lot more deals done than you're getting done right now. So with that, I'm going to go ahead and sign off, and we will catch you guys later. So thanks so much, and we'll see you, Tom.
All right. Talk to you soon. See you, Frank.
Bye.
Bye.